Hello everyone and welcome to our weekly podcast. Though moderating on Friday, last week we have witnessed indices falling from their all-time high as investors face signs of high inflation along with market volatility. The catalyst for the pullback was the release of the April Consumer Price Index on Wednesday, which rose 4.2% from a year ago against the forecasted 3.6%. That rise was mainly due to rental car prices jumping 10% in April, airline fares also rising 10%, while hotel prices up nearly 9% as many resumed traveling. On top of that, the producer prices on Thursday rose 0.6%, roughly double the expectations on the back of the supply shortages and a reopening surge in demand, thus pushing prices higher. To note that the current imbalances between supply and demand reflect pandemic distortions and thus are likely to prove temporary. Stocks recovered some momentum on Thursday, however seemingly helped by a bigger than anticipated drop in weekly jobless claims, while the Federal Reserve officials also made repeated assurances that the inflation data would not prompt any sudden shift in monetary policy. So the implications right now are that the faster economic growth and the higher inflation should benefit the cyclical sectors and the value-style investments. We also expect upward pressure on long-term rates, though the yield on the 10-year US Treasury note is staying well below its late March highs. Right now, we are not there yet. Last week's inflation surprise is only one data point and likely changes little from the Fed's point of view. Although the retail sales figure unexpectedly disappointed, the inflation theme remains in force due to the base effect so far. At this stage, the consumer inflation expectations and wage growth will guide us on whether price pressures will persist beyond this summer and result in the Fed reacting earlier in June. This week, we shall monitor the economic data on existing home sales and the PMI index. In our view, we are now seeing the market transitioning from an early recovery to the mid-cycle phase, and we recommend focusing on quality while recalibrating return expectations lower. Thank you again for listening to the podcast and see you next time.